Hello, Maverick traders. Welcome out to your market roundup for February 10th. Corey here with you. We're going to dive into markets. We're going to look at meaningful news. We're going to talk about sectors, what's heating up, what's cooling off, and then, as always, highlight some new trade ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so today was kind of interesting in that really commodities, which have been outperforming in the short term, continue to outperform. Dow, S&P, NASDAQ, all up between 0.5% to 1%, but oil was up 2%, gold was up almost 2%, and there was some news in the markets today about gold. Gold soars beyond 2,900 an ounce. Trump has been threatening tariffs, and there's also talk about the U.S. basically transferring their gold to the Treasury, and they have old school gold certificates that basically valued the gold many years ago at $10 billion or something like that, and the actual holdings are worth $800 billion or something along those lines. So there's talk about them transferring those and getting that influx of cash back to the balance sheet of the U.S. Now, there's a lot of dots to connect there, but gold spiked on this news. The idea being that basically it would set a little bit of a floor for gold. Now, there is also a mandate to end the penny. Basically, we've known for some time that a penny is not worth the amount that it costs to make that amount of copper. And so getting rid of the penny, one would anticipate that that is inflationary, because now things cannot be priced in 93 cents. It's got to be at 95 cents. Everything's got to round up is the way that retailers will do it, and they'll figure out a way to basically raise prices on the consumer, is the belief. But we shall see once again how that actually plays out in real time. Advanced decline line, about 63% of stocks going up, so about 2/3 of stocks going up, 1/3 going down. 50-period moving average still slightly bullish, 56% above their 50 MA, 44 below. We've been in a sideways range. As you look at the S&P, you really would have to say we're not going anywhere right now, but we're also potentially setting up for an upside breakout. So this is a classic looking chart pattern, what they call a bull flag. A bull flag is, well, a flagpole, and then usually the flag will trend in the other direction. So a bull flag will be a big move up, and then you'll get sort of a corrective aspect to it, right? That creates this little looking flag, and then the upside breakout. So one would anticipate that this is more of a bullish pattern forming than bearish. We've been neutral, but a breakout looms. Now, bearish flags look the opposite. You have a big drop, and then there's usually a relief rally that kind of creates a little series of higher lows and higher highs, and then ultimately we go and we break down out of the flag pattern. This one looks more bullish. Again, we're above the moving averages. Although they've kind of been bunched sideways, you're seeing a little uptick, a little turn upward in the 20, a little bit of upward slope. So maybe we're just on the cusp of that upside breakout. Look at where the NASDAQ is. We've been stuck in a range. They call this a volatility compression pattern, because basically you're getting squeezed tighter and tighter until it finally bursts. We're closer to the top end of the range. So could we fall back to the bottom end of the range? Could these markets roll over? Yeah, it could. But right now it looks just a little more bullish, and the possibility for an upside break. And finally, the Russell, which is in more of a downtrend. Well, again, I'll call it sideways, but a little bit weaker. You could even make an argument has been kind of ascending triangle like, and maybe it too will attempt an upside breakout. So heat map, we've got quite a bit of green on the chart. Certainly Tesla had a very bad day. Financials more in the red, but for the most part, quite a bit of green, as one would expect, quite a bit of green there in energy. If you look at the things that are related to gold, the gold mining stocks and so on, that's down here in the materials sector. And you can see the biggest miner there, Newmont Mining, very bright in the green. So that's a small sector of the market, but certainly gold. Nice performance today. And actually, last week we highlighted some gold miners. We talked about Agnico Eagle mines and some of those. So that trend can continue. Let's look at a few others here that might be on the cusp of some upside. So here's DraftKings. You've got a resistance zone over the top around 46. You've got a little ascending triangle like pattern here underneath 43, and it certainly looks like a breakout to the upside, and an upside target one would anticipate a push up there towards that resistance zone. In addition, here's EQT. I would say even a stronger looking chart because it would be a break to new highs. But notice gap down on some earnings, some news related, but then it's recovered back up. Kind of tried to push down again and recovered back up. It just keeps pushing and pushing back towards this 54 level, and that's what strong, healthy, trending stocks do. Now, unhealthy stocks keep pushing back to support. Here's DR Horton. Notice it establishes a support. It tries to keep holding here, and then eventually the dam breaks. And when the dam breaks, well, we break through on volume, expect DHI and some of those home building stocks to continue to underperform. Also GM, the automobile manufacturers, well, the charts don't look so good. Again, you have a relatively decent market that's going sideways. GM is making new lows and lower lows as we speak. So, are we going to trade down into the low 40s and a little bit lower from here? One would anticipate that that's the path of least resistance. So there may be an end coming to this consolidation we've been seeing for the past few weeks. We'll know it when we see it, right? We can't really guess that it's going to happen. We'll know it when we see it come to an end. CPI out on Wednesday. Applied Materials, Cisco, Deere, Robinhood, Coca-Cola, still very much in the middle of earnings season, so plenty of companies reporting. Make sure you check those earnings dates for any trades that you're going to take. Hope you enjoyed the market roundup. Have a great week, everyone. We'll see you next time.